Hey y'all, this is Miss Allie, and once again we're in MindTap. So once you log into MindTap, you come up to this screen that has the green textbook, and you will click Launch. Today we are in the middle of Chapter 2, and it's 2-2 that we're going to. So Chapter 2, Section 2. All right, so I need you to first click on the first part of the book, down arrow. Then I need you to click on Chapter 2, down arrow. Today we're going to 2-2, analyzing how transactions affect accounts. And we are clicking on the down arrow that's right under Lesson 2-2, where it says End of Lesson Review. When this opens up, I want you to go to Working Papers 2-2. Working Papers 2-2. Now you see the checks here. This is because I've already done these assignments. I did them in class. And so I want to try it again. And I've set these up so that you can go back and you can try them as many times as you want. So I'm going to click Try Again. This asks me, are you sure you want to clear all your answers? Yes, I am sure. So now I can go back to Work Together. It's 2-2, Work Together, page 42. All right. So in the book, it gives me my instructions as well as here on the computer. So it tells me that this company, Jensen Cleaning Services, uses the listed accounts. Some of the accounts will be explained in Lesson 2-3. So we're only using some of them in this 2-2. It says prepare 2 T accounts for each transaction. On each T account, select the account title of one of the accounts affected by the transaction. Enter the debit or the credit amount in each T account to show the transaction's effect. Okay, so we're going to walk through this. Here are your accounts. These are the only accounts that we can use for Jensen Cleaning. This is the only account titles that Jensen Cleaning uses. The other tab here are the transactions. We have 5 transactions to record for the month of March. These transactions are also in your book, whichever way you want to do it. All right. So the first one says March 1st, and they've already set up the T-charts here for you. You just have to put in what goes where. All right. And it says received cash from owner as an investment. Well, I'm going to put my little trusty friend, DC Adler, over here so we can remember that. All right. DC assets, liabilities, owner's equity. That's drawing, that's expenses, and that's revenue. Now, looking through these, right now, for this assignment, for these 5, we're not going to have to worry about drawing, expenses, or revenue. All right. We just have to do these. Now remember, I want you to remember all the time, debits equal credits. So whatever you do on one side, you got to do on the other side. Remember also, this is showing you the normal balances for these. So it means that assets, if you own it and it has value and you're getting more of them, they're going to go up. But they're going to go down. They're going to decrease. When we pay out money, it's going to decrease on the credit side. Now, likewise, liabilities and equity, they increase on the credit side. So when we get new loans, accounts payables, when we get new loans, or we get more money put into the company somehow, it's going to go up on this credit side. But they will decrease if the money goes away, if we pay off on the liability. When we make a car payment, it makes our liability go down, so it would be on this side. Okay, so I hope my colors help you. And so we can go through and look at these. Okay, So I've got received cash from owner as an investment for $4,000. Now I know right off the bat, 4,000's got to go in the debit and 4,000's got to go in the credit because they've got a balance. I know that straight off the top. So they're giving me 4 accounts to choose from. Received cash from owner as an investment. They're giving me cash, drawing, prepaid insurance, and supplies. Received cash. I guess it's going to be cash. All 4 of these choices increase on the debit side. But it's telling me cash. So that's what I got to go with, cash. It says the owner gave this money out of his personal money or her personal money. She put this money into the business. Okay, so on the credit side, I got to decide, is it a liability or is it an equity? In this case, the owner gave it, so it's equity. It's money that eventually will be paid back to the owner. So I look at my options here. Capital. That's what we call the account, the owner's capital. So John Jensen is the owner of this company, of Jensen Cleaning. And he just put $4,000 into his own business, which will eventually be paid back to him as the owner. All right, now we go to March 3rd. March 3rd says paid cash for supplies, $95. So I know 95 goes here and 95 goes here. It gives me the options. Remember, it says paid cash for supplies. It gives me accounts receivable, Johannes Eriksson. Well, account receivable is when Johan would be buying stuff from you and just give you an IOU. So that doesn't make sense here. John Jensen, it does not say that John's taking money out. Withdrawal means take money out. So it's not those two. So then you're down to supplies or utilities expense. Well, the transaction clearly tells you supplies. Supplies are assets, so they're going up. Now it says that we paid cash. Cash is also an asset. However, in this case, you gave $95 of cash for $95 worth of supplies. They cancel each other out. So that would be the red arrow here on the debit side would be the supplies, and the red arrow on this side would be the cash because your cash is decreasing. Go to March 4th. Bought supplies on account from Supply Depot, $120. So John needed some more supplies, but this time he didn't. He needed some more supplies. That's what he was bringing back to the office. But he didn't pay cash for it. It says he paid it on account. So cash is not impacted on this one. He gave them an IOU. He said, I'll pay you later. Well, that's a liability. That's an accounts payable. So the only accounts payable on here is Supply Depot. And that's what the transaction says in the book. Supply Depot. Supplies went up. We got more supplies. But the loan, he now is in debt to Supply Depot to pay them $120. So his liability went up and his asset went up. March 6th, it says pay cash for insurance, $250 and $250. Okay. So it gives us choices here. It doesn't say anything about Johan Eriksson. It says nothing about John. It does say prepaid insurance, and it does not say supplies. So he bought prepaid insurance, which is an asset. You own it, it has value. Now, the credit side, our options are Supply Depot, which it doesn't say anything on this one about Supply Depot. It does say cash. It does not say that he took his money out for personal use, and it does not say utilities. So it has to be cash. He paid cash. He exchanged one asset for another asset. So the up arrow here would be for the insurance policy. The down arrow here would be for the cash that he had to pay out. His cash reduced. Now we go to March 9th. Paid cash on account to Supply Depot. $80 and $80. So here it says accounts payable Supply Depot, John Jensen drawing, rent expense, and supplies. The transaction says paid cash on account to Supply Depot. So the only one it mentions is Supply Depot. And you say, well, Miss Allie, liabilities go up on the credit side. Yeah, but they're paying $80 on it. So this reduces it by $80. That's why it has to go on the debit side. It says on here that paid cash. So I got to go with the cash. So John's cash is decreased. This red arrow, cash is decreased. That's why it's over here. But how much he owes to Supply Depot has also decreased. Remember, he made a purchase up here of $120. Now he's paid $80 on that. So how much does he owe now? He got $120 worth of supplies. Now at the end of the month, or on the 9th, he pays $80, right? He only owes $40 now. So his liability did decrease. That's the way that works. Okay. So let's check answers. Got a 20 out of 20. All checks. Now you can go to Save and Continue. It takes you over to the On Your Own, which works the same way, only this time you're using a different company. Processes is the same, Plumbing Solutions. All right, so go at it, practice it, practice it. It'll get easier the more you practice it, and I'll see you next time. Bye.